Hi everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden within company filings. Today we are diving deep into Federated Hermes Managed Pool Series latest shareholder report for June 30, 2025. Get ready because we are about to decode community, linked in the description if you want to join the conversation. And dive even deeper, September 40, you know we're all about finding the real story behind the numbers. And hey, if you love getting straightforward insights from these kinds of documents, make sure you hit that subscribe button. We also have a Discord community linked in the description if you want to join the conversation and dive even deeper. Alright, so we've got a pretty hefty report here detailing the finances of several Federated Hermes funds. We are going to focus on the juicy parts, the actual financial performance, and what it tells us. Think of this as a peek under the hood of these investment strategies to see how they're really doing. First up, let's look at the Federated Hermes Corporate Bond Strategy Portfolio. This fund is all about investing in corporate bonds. The report tells us about its holdings, its costs, and some key statistics. Now, who doesn't want to know about costs? Right, the report asks, what were the fund costs for the last 6 months? For a hypothetical $10,000 investment into this fund, the cost of a $10,000 investment was $0, and the cost paid as a percentage of a $10,000 investment was $0, and the cost paid as a percentage of a $10,000 investment were 0, means the fund is either very new or has some special arrangement. Let's check out the key fund statistics. For the corporate bond strategy portfolio, the net assets stood at $11,646,956. The number of investments was 410.56. Lower end Bryant and selling a lot of its holdings, which can sometimes mean a more stable strategy. Now for the really interesting part, the fund holdings, let's break down the top security types as a percentage of net assets. Corporate bonds make up a massive 93.5% of this portfolio. That's the core of their strategy. Following that, we have cash equivalents at 3.2% and foreign government agency at 2.1%. Securities lending collateral is at 0.5%. It's good to see that the bulk of the money is in what the fund is named for, corporate bonds. Next, let's shift our focus to the Federated Hermes High Yield Strategy Portfolio, also known as FHYSX. This portfolio aims for high income, often by investing in riskier, higher yielding bonds. Looking at the key fund statistics for this portfolio, the net assets are $1,021.62. Now, this is interesting. The number of investments is only 2. That's a very small number of investments for a fund, and hints that it might be investing heavily in just a couple of underlying funds or assets. The portfolio turnover is 6%, which is even lower than the corporate bond fund. This suggests a very buy and hold approach. Let's dive into the top index classifications. This report notes it reflects the pro rata portfolio composition of underlying affiliated investment companies. Technology is the largest classification at 12.6%. Insurance minus P&C is at 9.4%, then cable satellite at 5.8%, healthcare is at 5.6%, building materials at 4.6%, insurance minus P&C is at 9.4%. Then cable satellite at 5.8% and independent energy at 3.7%. Cash equivalents are at 4.0%, building materials at 4.6%, and Drame Automotive are both at 4.2%. Gaming follows at 4.0% and independent energy at 3.7%. Cash equivalents are at 4.0% as pretty standard. The dominance of technology and insurance in the breakdown makes sense for a high yield strategy looking for income opportunities. And finally, we have the Federated Hermes Mortgage Strategy Portfolio, or FMBPX. This fund focuses on mortgage related investments. Checking the key fund statistics, we see net assets at a hefty $99,049,2851, which makes this the largest of the 3 funds we're looking at today. The number of investments is again very small at just 2. This strongly suggests these funds are investing in other affiliated funds to manage their portfolios. Portfolio turnover is 8%, which is also on the lower side. Let's look at the top security types for the mortgage strategy portfolio. US government agency mortgage-backed securities dominate this portfolio at 93.8%. That's nearly everything. Collateralized mortgage obligations are next at 11.6%. Cash equivalents are at 3.1%, and asset-backed securities are at 2.6%. Then we have non-agency mortgage-backed securities is a clear sign of the fund's core strategy focusing on government-backed mortgages for stability. Now let's dig into the actual investments. This is where we see the dollars and cents behind the strategies. We're going to look at a Federated Hermes corporate bond strategy portfolio's detailed holdings. Remember how we said corporate bonds made up 93.5% of the holdings? Let's see some specific examples. We see RPM International Inc. with a senior unsecured note at 4.55% due in March 2029, valued at $3.89 There's another note from the same company at 5.250% due in June 2045, valued at $39.83. There's another note from the same company at 5.250% due in June 2045, valued at $37,870. Here's some from the metals and mining industry. Anglo American Capital plc has a senior unsecured note at 2005% due in March 2005 for $3. Freeport McMoRan due in November 2044. Valued at 4.42% due in November 2034, valued at 4.48%. Due in November 2031, valued at $4.48 These are significant investments showing the fund is deployed across various industries. Looking at capital goods, specifically aerospace and defense, we see BAE Systems Holdings Inc. with a senior unsecured note at 3.85 valued at $229,260. They also hold a note from BAE Systems plc for $100. The Boeing company also appears with several notes, including one at 227 PLCN for $100. The Boeing company also appears with several notes, including one at 2.7 valued at 30.88 town 90 spay hour and $10. These show quite a bit of exposure to major defense and aerospace companies. In diversified manufacturing, we see Ingersoll Brand Inc. with notes including one at 5.45% due in June 2034, valued at $128,060,028, and Vontier Corp. with a note at 1.8% due in April 2026, valued at $171,748. This table shows a long list of corporate bonds from many different companies. The total for corporate bonds alone is over 180 different companies. The total for corporate bonds alone is over $120 million. Beyond corporate bonds, the fund also invests in foreign governments and agencies, making up 2.1% of net assets. For example, there's a Government of Mexico note at 3.752% due in January 2028, valued at 680%, due in March 2027, valued at 27, valued at 27, valued at 26,000, valued at $20. This diversification into foreign government debt can offer different kinds of returns and risks. Now, this is quite interesting, a repurchase agreement, making up 3.2% of the fund. This involves an interest in a $718 million joint repurchase agreement with Bank of America NA, where the bank will repurchase securities provided as collateral. The underlying collateral is US Treasury securities. This is a way the fund might generate income on its cash holdings or get short-term financing. The fund also holds an investment in another Federated Hermes fund, the Federated Hermes Government Obligations Fund, Premier shares valued at $582,080. This shows the intercompany investment strategy at play. So the total investment in securities for this corporate bond strategy portfolio is over $115 million. It's clear they are heavily invested in bonds. The identified cost of investments is $121,641,641,641,641,000, indicating one bonded values are currently lower than what they paid for them, a net unrealized appreciation. Let's look at the financial highlights to see performance over time. For the 6 months ended June 30, 2025, the net asset value per share was $10.6. This is up from $9.97 at the end of the previous year. The total return for this period was 4.25%. This is a positive return for this period was 4.25%. This is a positive return, which is what investors want to see. Now for the ratios to average net assets. The net expenses ratio is listed as 0.00%. That's fantastic for investors. The net investment income ratio is 4.67%. This means the fund is generating income from its investments. Looking at the statement of assets and liabilities as of June 30, 2025, we see the investment in securities valued at over $115 million. Total assets are just under 457,965 shares outstanding, and the net asset value per share is 10,965 shares outstanding, and the net asset value per share is 10,965 shares outstanding, and the net asset value per share is $10.46. The statement of operations for the 6 months ending June 30, 2025 shows investment income of over $4 million, primarily from interest. Expenses are listed, but then fully reimbursed by the advisor, meaning the net expenses are zero, which is a huge win for shareholders. The fund reported a net realized loss on investments, but a larger net change in unrealized appreciation, resulting in a significant gain from operations. The statement of changes in net assets shows a substantial increase in net assets from operations, but a significant decrease due to share redemptions. Essentially, more money was taken out of the fund than put in during this period besides the operational gains. Now we shift gears to the Federated Hermes High Yield Strategy portfolio. This is the one that only had 2 investments. Let's examine its portfolio of investments. Almost all of its value is in an investment company representing 99.5% of its net assets. That company is the High Yield Bond Core Fund. The identified cost for this investment company is over $96 million and its value is nearly $99.8 million. This confirms our earlier suspicion that this fund is primarily a fund of funds holding another affiliated fund. There's also a small repurchase agreement for $486,000. In the financial highlights we see for the 6 months ended June 30, 2025, the net asset value per share is $11.85. The total return for this period is 4.92%. The net expenses ratio is again 0.00%, which is excellent. The net investment income ratio is 6.30%. The statement of assets and liabilities shows net assets at just over $100 million with 8,459 shares outstanding. The net asset value per share is $11.85. The statement of operations for the high yield strategy portfolio is interesting. Total income is just over $2 million, primarily from dividends received from its affiliated holding, which is the High Yield Bond Core Fund. Expenses are listed, but again fully reimbursed by the advisor, resulting in 0 net expenses. This fund also shows a net realized and unrealized gain on investments. Looking at the statement of changes in net assets, we see a significant increase in net assets resulting from operations, and a much larger increase resulting from share transactions. This indicates a substantial inflow of cash into the fund during this period. Since the High Yield Strategy Fund invests heavily in the High Yield Bond Core Fund, we should look at that briefly. This report is from December 2024. Corporate bonds make up a massive 95.2% of this core fund's holdings. The sheer volume and variety of these bonds are striking. We see companies like Transding Inc. with multiple notes totaling over $15 million in value. Ford Motor Credit Tompi 75% note due in November 2025, valued at nearly $7 million. Moving to cable satellite companies, we find CCO Holdings LLC with numerous notes. One note at 4.250% due in February 2031 is valued at over $4.6 million. CSC Holdings LLC also has several notes. This highlights a significant concentration in the communications sector. In the insurance sector, specifically property and casualty, we see a Crusher LLC with a bond at 7.5% due in November 2030, valued at over $3 million. And Amwins Group Inc. with notes including one at 4.875% due in June 2029, valued at nearly $4 million. The fund's exposure here is substantial, reflecting the income potential in this sector, even with higher yields. Technology is a major focus here at 12.7%. Broadcom Inc. has multiple notes totaling over $12 million in value. Cloud Software Group Inc. also has significant holdings across several notes. It's clear technology companies are a key area for higher yield opportunities. This fund alone has over $91.16 million in total investments. Now, let's move to the Federated Hermes Mortgage Strategy portfolio. This is the largest fund we're reviewing, with net assets of over $900 million. Its portfolio of investment shows an overwhelming 99.7% in an investment company. That affiliated entity is the Mortgage Core Fund. The identified cost of this investment is over $966 million, and its value is nearly $980 invested in the Mortgage Core Fund. There's also a repurchase agreement for over $3 million. Let's glance at the Mortgage Core Fund's portfolio of investments as of December 2024. This is where the real mortgage action is. Federal Home Loan Mortgage Corporation, or Freddie Mac holdings, are at 28.6%. There are numerous mortgage-backed securities from Freddie Mac with coupon rates ranging from 2.000% to 5.550%, reflecting a variety of maturities and structures. Some of these are valued in the tens of millions of dollars, showing substantial exposure. Even more significant are the Federal National Mortgage Association, or Fannie Mae holdings, at 45.8%. These include many mortgage-backed securities with coupon rates from 2.0 and 2.5% up to 6.5% spread across various maturity dates far into the future, like 2052 and 22. The value here is in the hundreds of millions for Fannie Mae alone, demonstrating the fund's heavy reliance on agency mortgage-backed securities. Collateralized mortgage obligations, or CMOs, make up 9.7% of the portfolio. These are more complex securities derived from pools of mortgages. We see CMOs from both Freddie Mac and Fannie Mae with varied structures and rates. Asset-backed securities are at 2.0%. This includes auto receivables and single-family rental securities. The single-family rental securities are a more recent and potentially interesting investment class. Looking at the financial highlights for the mortgage strategy portfolio for the 6 months ended June 30, 2025. The net asset value per share is 8.07 positive gain. The net expenses are listed as 0.00%, which again is great news for investors off-road chew. The statement of assets and liabilities shows net assets at nearly $1 billion. Total assets are almost $999 million, with liabilities at about $8.3 million. This indicates a well-funded portfolio with substantial assets. The statement of operations shows investment income of around $29 million, mostly from dividends from its affiliated holding, this Mortgage Core Fund. Expenses are listed but fully reimbursed by the advisor, leading to zero net expenses. The fund reported a substantial net realized and unrealized gain on investments due to the performance of the underlying Mortgage Core Fund. The statement of changes in net assets shows a massive increase in net assets resulting from share transactions, indicating significant inflows of capital into this fund and its underlying holdings. It's plain to see that the market for mortgage-backed securities driven by these internal funds is seeing a lot of activity. Now let's tie all this together. What's the story here? We've seen 3 funds, the Corporate Bond Strategy High, Yield Strategy and Mortgage Strategy portfolios. Notably, the high yield and mortgage funds are heavily invested in affiliated funds. This suggests a strategy of internalizing asset management, where one fund feeds into another, which is a common practice in large financial institutions. The Corporate Bond Fund holds a diverse range of corporate bonds, showing a more direct investment approach into that market. The zero expense ratios across the board are a major positive for investors directly, meaning more of the returns stay in shareholders' pockets. However, the heavy concentration in specific asset classes like mortgage-backed securities in the Mortgage Strategy Fund, or the reliance on just 2 investments in the High Yield Strategy Fund, could be seen as risks if those specific areas face downturns. Almond Vovrite invested in affiliated funds. This suggests a strategy of internalizing asset management, where one fund feeds into another, which is a common practice in large financial institutions. The Corporate Bond Fund holds a diverse range of corporate bonds, showing a more direct impact. The value of the Mortgage Core Fund is enormous, over $6 billion at the end of 2024. This indicates a massive pool of assets managed within the Federated Hermes family of funds focused on the mortgage market. With that amount of money invested in mortgage-backed securities and CMOs, the fund is very sensitive to interest rate changes and prepayment speeds, a constant balancing act for the managers. On the corporate bond side, the list of holdings is extensive, showing a broad approach to credit selection, but it's important to note the cost of these investments is higher than their current market value across the board for the corporate bond fund. This means the fund is currently holding underwater assets, but that's not uncommon in bond investing, especially if they plan to hold them to maturity. What's notable is the overall strategy of creating these specialized funds within a larger structure. It allows for tailored investment approaches, but also means diversification relies heavily on the performance of the underlying affiliated funds in the case of FHYSX and FNBPX. The corporate bond fund, however, shows a more traditional diversified bond portfolio approach. For FMBPX, the investment in mortgage core fund is so huge that the shareholders of FMBPX are essentially betting on exactly what mortgage core fund is doing. Considering the current market where interest rates are a major factor for bond funds, these strategies are all about navigating that landscape. The minimal turnover in most funds suggests a long-term outlook. The significant inflows into the mortgage strategy portfolio are showing continued investor interest in this asset class, despite the risks associated with it. Overall, Federated Hermes seems to be running a well-oiled machine, with these funds with a clear focus on managing costs for their investors. The key risks lie in the concentration of certain portfolios and the performance of the underlying mortgage market and corporate credit landscape. Alright, that's our deep dive into Federated Hermes' latest filings. What do you think about these financial strategies and the low expense ratios? Let me know your thoughts in the comments below. If you found this breakdown valuable, please hit that like button. It really helps us out, and subscribe for more corporate decoding. And don't forget to join our Discord community, linked in the description, to keep the conversation going. Catch you in the next video.